What's up, guys? It's AMMA here, and I'm going to go over with you right now what my thoughts are for the market as a whole in general over the next few weeks or so. And just my thoughts on the market overall and how we could play this with the least amount of risk involved. All right. So, obviously, we know I've got two charts here. I've got the SPY on the top, I've got NVIDIA at the bottom. Obviously, we know Nvidia has been the bull. It's ripped, I think, 350% since the beginning of 2023. It went from $150 in November of 2022 up through $975 of late. We know these things, okay? So that is not a surprise for us. What we don't know is what's next. How do we kind of prepare for what's next, and how do we know if we need to really refer to NVIDIA or not? And this is a super quick, short video, guys, about the market in general and some of my thoughts with it. So I'm on the daily chart, as you can see here. All right, and what really struck me overall was the following. All right, you guys know what bullish and bearish divergence is. Divergence is where the RSI shows higher on the RSI and lower on the stock price and vice versa. I'm going to talk about divergence between these two charts. And what that means is the following. All right. Last week coming into this week, all right, we had FOMC. If we look at the chart here, we know this was our FOMC day right here. Okay. And it did continue the next day, but this day right in the middle here was FOMC. SPY broke a higher high during FOMC. All right. Our previous high was approximately, I think, if I'm not mistaken, I think it was 518.40, something like that. Okay, great, cool. We had a substantially higher high. We broke by $6 over 1% higher. All right. But NVIDIA, who's supposed to be leading the charge, this is a very, very telling sign to me, guys. All right. Because NVIDIA's previous high was Friday, March 8th, and we had a high of 974. All right. We, on FOMC, which was last week, Wednesday, we severely lagged behind that. Our high on FOMC day was only 904, or approximately 8% below that previous high, all right, which is right here. Here's our previous high, and here's FOMC day. This is very, very telling to me because it's hinting at the fact that NVIDIA is starting to lag a little bit, okay? I'm not saying NVIDIA can't break higher high. I'm not saying NVIDIA is not going to hit $1,000. I'm simply saying in the grand scheme of things, we are seeing the SPY create higher highs and NVIDIA is creating lower highs. That could change tomorrow and throw this thesis out the water, all right? We understand that. And the second part of this that is kind of interesting to me with this higher highs and lower highs is we still have a very good volume on NVIDIA, but we have lowering volume the last 3 weeks. We are forming at the time of this recording, Tuesday the 26th, we have an inverted hammer on our weekly as well. All right, with higher volume trending into lower volume. All right. And at the SPY, we created higher highs this week. All right. So what does that mean? Does that mean it's the first precursor of the market going to start to roll and become a little softer? Not necessarily, all right, because there is two stocks that everybody forgets about that used to be the leaders, the bulldogs of the market, all right, and they've been lagging. They've been dogs for the last 3 months, and that's Tesla and that's Apple. So let's pull up these two stocks because my thesis is the following. All right. If we get the bullish flow from NVIDIA start to come into Apple and Tesla, we could continue on with the bull run. All right. Because the reality is NVIDIA NVIDIA has been, of course, the strongest the strongest company. We know. The big argument is, did the whole market run based on strictly NVIDIA? And it's a good argument, because if we go past those Mag 7 stocks and into some other stocks, the reality is a lot of them didn't reach all-time highs. A lot of them have a lot of legs. And I talk about these all the time. These are the stocks I like to trade. Stocks like Snap and Zoom and Robinhood, and all these stocks have been really Disney. These stocks have been really making a lot of money off of, because I haven't been looking at NVIDIA. I'm not really trading it. But however, when it comes to overall market sentiment, what I have to say is the following. If NVIDIA proves this tendency of not being able to break that 975, all right, and in this week into next week, we don't create that higher low, then step 2 is the market starts to turn as a whole, at least the tech industry starts to turn as a whole, and we would look at some possible downside. Or B, the money starts to flow into Tesla and Apple. All right. For me personally, I feel like Apple needs to come down to the $165 level. I was telling everybody in the Discord today, and I'll put a line there. I want to see Apple dip below 165 and back above it. I am not confident in Apple in a bullish way, any way, shape, or form until that happens. We can't sit and float in air here. We've got no major levels here, guys. So I'm not bullish on Apple, of course not. Tesla, a little bit different. Tesla could possibly pick up some support here. We know that there's been this anti-Elon campaign overall, and we know a lot of that is why Tesla's been a dog. But we also know, if we look at our weekly chart here, that historically these trend line bounces are pretty substantial. So overall, when it comes to the market, that's my overall semi-soft thesis, is if NVIDIA starts to roll over and doesn't create a higher high in the next couple weeks, okay, then we need to see that money flow into Tesla and Apple. All right. And if that doesn't happen, then I think we start to get a little bit of that pullback overall in the tech sector. So again, as far as, levels, so on and so forth, that's really what I'm looking for specifically. If we pull up the SPY chart and we put on that weekly, we are still in that uptrend of higher highs every single week up until 2 weeks ago. This week right here was the first week we didn't have a higher high, but we did have a higher low. We did not have a higher high on the chart since right here. And overall, since the beginning of October, these are the only 2 weeks out of 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 12, 14, 16, 18, 20, 21 weeks. Out of 21 weeks, we have had 2 weeks without a higher high. Yes, the market needs to breathe. No, it doesn't mean that the market has to come down tomorrow. Let's put that into perspective as well, boys and girls. If we put on this monthly chart, and we really look at the monthly chart, all right? Oh, my mouse is acting weird. So let's really look at these monthly levels, all right? Let's look at some past breakouts. Here's one. In February 2016, we went from $160 to $260 approximately in just about 2.5 years. A little less than 2.5 years. From March of 2016 to January 2018. So 2 years. 23 months, we went 65% on the market. 65% on the market in 23 months. All right. Next, let's look at this one. From, what is this right here? From December of 2018 until February of 2020. So a year and 3 months, we went from approximately $215 to $319, almost 50% in 14 months. 50% in 14 months. 65% in 23 months. Why, again, is it that we simply must come down after a 26% move in 4 months? Yes, a little breath, a little breath. But this is by no means some extraordinary feat of the market. Let's let even COVID. A lot of people are like, oh, it's COVID, it shouldn't count. But COVID, 205 to 464 in what was this? 2 years, a year. So 22 months again, and we went 150% on the market. I mean, just saying. So anyway, that's a little bit of my thought on the market as far as rotation and everything else. If you check out my Twitter, and come check us out in the Discord. I talk a lot about sector rotation and what I'm looking at right now. Thanks, guys, for joining me. Just a little bit of my market thoughts overall. Bye.